Hello and welcome. My name is John Human, founder of Investability, the new educational resource aimed at helping investors identify the world's best investment opportunities. Today, we're going to be taking a detailed look at one of them, Vietnam. The Asia pivot has been the big story in investing for some time, with investors ploughing capital into the continent's so-called tiger economies and creating a virtuous circle of economic growth. Trade liberalisation, rapid industrialisation, and the expansion of domestic wealth is a story repeated across the continent. Led by China, Asia is estimated to have contributed 2/3 of recent global growth and now accounts for nearly 2/5 of global GDP. It has become an intrinsic part of the global supply chain, supplying manufactured goods to the West, and as the region's wealth has grown, offering a huge market for Western companies to target. The continent hasn't, of course, escaped the pain of the pandemic, not least China, where new outbreaks have meant further lockdowns and massive disruption to global supply chains. Chinese stock markets are in a deep bear market, exacerbated by political tensions and worries that the engine of global growth might be stalling. But there are other bright spots in Asia, which are picking up the baton, not least Vietnam, which we're going to discuss today. Its rapid reforms and massive infrastructure investments have set it on course to become a high-income country by 2045. And its stock markets reflected that, outperforming other major indices over the last half-decade. The question, of course, is whether that can continue. And to help us answer that question, I'm joined by Craig Martin, chairman of Dynam Capital, which manages the popular Vietnam Holdings Investment Trust, and economist Christine Shields, who specialises in country risk and after a long career in banking, writes for Investability. Welcome, Craig and Christine.
Hi. Thank you for having us.
So, first of all, I think it's a good idea if you introduce yourselves. We'll start with you, Christine. Give us a little bit of your background and how you came to be so interested in Vietnam.
Well, I'm an economist by profession. I've worked in the city for over 30 years. I set off in Royal Bank of Scotland, slightly against my better judgment at the time, but in fact I stayed there for almost 20 years and had a wonderful time. It was whilst RBS was growing, so it was a really dynamic time to be working for the bank. It was really good. And I specialised in Asia then, having just travelled around the region before I started to work. I left RBS in 2006, went to Standard Chartered, and that was again a great opportunity to go there just before the big boom and of course then the global financial crisis. But it was an incredibly interesting time to work in a bank like Standard Chartered, which was growing massively across Asia. So of course I travelled there a lot. And now I work with Investability, and I'm associated with Oxford Economics, who are the world's largest economic forecaster.
Brilliant. Thanks, Christine. We'll come on to your personal experience of Vietnam in a second. Craig, can you give us a bit about your background and again, what brought you to be so interested in Vietnam as an investment destination?
Certainly, well, there's a couple of current common themes there as well. I've been involved in Southeast Asia, investing in Southeast Asia, particularly in Vietnam, over the last 30 years. About 20 years ago, I was also working at Standard Chartered, same place as Christine, in the private equity team there, and we made some very interesting investments in Vietnam. I was so enamored by getting back to Vietnam that I left and joined the UK's Prudential, which is a big investor in Vietnam's capital markets. 5 years ago, teamed up with a gentleman called Tin to form Dynam Capital, and we took over the fund management of Vietnam Holding 4 years ago this summer. Vietnam has been always a place of great interest, tremendous growth and excitement, and hopefully we can talk about that during the call.
Absolutely. I mean, it is a country with a tumultuous past. I mean, we all know it for perhaps the wrong reasons. I mean, how did it get from that horrific episode in its history to where it is today? What began this process? Perhaps, Christine, we can start with you.
Well, I actually think it's a case of pragmatism. I mean, obviously, initially, after the war ended, there was a big cultural divide between the North and the South. But over time, a balance has been reached. I mean, there are striking contrasts when you visit the North as opposed to the South. You can tell the difference, really, though I'm sure it's narrowing gradually and will continue to do so. But I think, in a sense, a compromise has been found between the commercial enterprise culture of the South and the political dynamics of the North. And I think that's worked for the country. There's a sort of political stability which allows gradual economic reform to happen in the way it has happened in China. So it's step by step, gradually, slowly, make a mistake, step back, go a different way, just as in China. And I think that's the way to do it rather than a big bang shock.
I mean, it sounds like this is a cultural phenomenon, and there is something about Vietnam and its culture which has enabled it to emerge from the rubble of the war to what it is today. Craig, is that something that attracts you to the region, that the culture of its people and what they can do?
Yeah, very hardworking people, very driven. They pull along. I think in terms of their thinking, there's a kind of Confucian element to it as well, kind of Northeast Asian influence, as well as it being at that meeting point of Southeast Asia. So as Christine said, the reunification, which is celebrated actually this Saturday on the 30th of April, when the North and the South came together after their war with the Americans, the people pulled together, very hardworking, and the government brought Vietnam in from the cold, so to speak, with an open door policy, which has led to a position today where Vietnam's a massive trading partner globally, about 200% of its GDP through import and exports, many bilateral and multilateral trade agreements. So although it's a big domestic economy, 100 million people and growing rapidly, it's looking outwards on the international scene. So the people are hardworking, they can turn their hand to anything. And over those last 30, 40 years of this open door policy, a lot of foreign investors have flocked to the country, many from North Asia, from those emerging tigers that you alluded to at the beginning of your introduction, the Taiwanese, the South Koreans, the Japanese, that have gone through their own industrialization as they were tiger economies once. They recognize similar opportunity in Vietnam. And so they've been investing, and the Vietnamese population employed in those industries are getting richer and wealthier and more experienced. And so this virtuous cycle, and as one of the largest economies, one of the largest stock markets in Southeast Asia, one of the largest populations in Southeast Asia, it's really poised to punch above its weight over the next couple of decades, I would say.
Can you talk about some of the reforms that have helped to get there? So, Christine, you mentioned sort of the political pragmatism. What sort of reforms have helped it get where it is today? And actually, Craig, you mentioned foreign capital flowing into the region. Presumably, a lot of that has gone into the infrastructure to enable Vietnam to grow in the way it is. Can we perhaps have a look at those two things to start with? Christine, perhaps you could start with sort of political reform.
I think the biggest reform really has been the slow privatization of the state-owned companies, because that's where the Achilles heel of Vietnam still is. Those state-owned companies are still inefficient, but of course they provide labour opportunities. So it does mean that you're still employing everybody. So unemployment's less than 3% of the workforce, and of course that helps keep political stability on the road, because you haven't got the discontent that comes from worklessness. But over time, obviously, there's a shift in the employment pattern as those firms are privatized and people upskill. And that's one of the big strengths of Vietnam, of course, that there is a huge value placed on education. I can remember on various visits I've been on talking to people about whether they should send their children to Europe or to the US to finish their education. And, there's a big push, big value placed on tertiary education, which is great. And of course, there's a very, very high level of literacy. And Vietnam's leapfrogged a lot of other emerging markets simply by having a very, very high standard of education for everybody. I mean, literacy, I think, is over 90%, which is incredibly good for an emerging market.
I think we should come back to education, because I would argue that potentially underpins what's going to be a transition from sort of a more commodity-driven, infrastructure-driven market to one that is focused on higher value industries. But we'll come back to that, because I think we're going to talk about companies later. Craig, can we talk about the development of infrastructure in Vietnam, as I mentioned, that's helped it achieve what it's achieving today?
There's two parts to that. The largest part historically has been the foreign direct investment. So this is people establishing manufacturing for export from Vietnam and making Vietnam a key part of the global supply chain. Many things are made in Vietnam. Half the world's Adidas and Nike trainers are made in Vietnam. Uniqlo clothes and everything like that is made in Vietnam. A quarter of Vietnam's GDP is involved in manufacturing high-tech phones and computers and tablets for people like Samsung. So the foreign direct investment into the country over the last 30, 40 years has required improvement in infrastructure in terms of industrial parks and the linkages and investments in the ports and the roads. A lot of that has come from those foreign players. And the government has also more recently been starting to turn the taps of even more domestic capital for infrastructure, for roads, for airports, those kind of things. And then trying to get a blend, which is to involve foreign investors directly in infrastructure through things such as PPP, public-private partnerships. Now, they take a while to get to work and get all the enabling laws ready, but they're starting to use that as a means to mobilize foreign capital for infrastructure. So most of it from the foreigners has come directly into the businesses that they're running for export. And that's then supported by these building blocks of business, the industrial parks, the logistics, that kind of thing. And so the private sector has had a big role to play actually in infrastructure, in the ports and the other network developments. But the government still, as with every country, has a key role to play. And they're trying to establish a way to enhance that with partnership with foreign investors. So they've attracted, a lot of investment, and this is greenfield investment into roads, into power plants. It's not so much brown infrastructure replacing old, it's putting in the new. And it's been a good mix of the private sector and the government providing the mechanisms to allow people to invest in that. And infrastructure investment has this multiplier effect, which is why we've seen this multi-decade growth rate in GDP of 6.7% per annum over the last 30 odd years. And that's really lifted the whole country. So infrastructure has a massive role to play.
I mean, given that Vietnam is still a communist country and that foreign investment inflows are so important, is there a tension there that needs to be managed? What has the country done to really open itself up to foreign capital, and is there further to go there?
It's fully aligned with that. So the government's plan is to raise the wealth of the average Vietnamese person, to have Vietnam become a much more modern, industrialized nation, and to have Vietnam become an increasingly important part of the global supply chain. So that accommodates what foreign investors want to see. And so that's part of this virtuous circle. So yes, communist from a political conservative structure, small c, but very much capitalist in terms of mobilizing money to achieve economic growth, to lift the wealth of its people.
I mean, it was hit hard by the pandemic, like every country was, but I mean, Vietnam was to a very large extent, and is, somewhat dependent upon tourism, so would have been hit harder than most. How did it respond to the pandemic? And do you think that its response was perhaps ahead of some other countries that's really helped it get back on its feet quicker? Perhaps Christine, you could address that one.
I think the initial response was quite disappointing, but then I suspect it wasn't the only country caught on the back foot by the outbreak of the pandemic. But they rallied very quickly, and they've now got a very, very high vaccination rate, again, over 90%. And that's really impressive. And of course, it's given them that resilience, so that now they've taken the view that COVID is endemic, not a pandemic. Let's just get on with life. Contrast China, where I hear there's panic buying going on in Beijing now because people fear a lockdown there on the scale they've done in Shanghai, which is just, the Shanghai tales are unreal, with people being sealed in their compounds. You're not even able to take the dog for a walk. It's just unbelievable. Vietnam's avoided all of that. It did have a little bout earlier on, towards the end of last year, but this year it's kind of emerged quite well. But obviously, it's suffering from the implications of China's lockdown, because it relies so much on Chinese inputs for its intermediate goods.
Absolutely. Craig, should we be worried about what's happening in China in respect to Vietnam, particularly in terms of geopolitical tensions in the South China Sea?
Cool.
I think the world has to be wary of what happens to China, because it's such a large part of the global economy. Vietnam's done a great job by diversifying its export base, a lot more of its exports to America, to Europe. As Christine said, yes, it does import some intermediate goods from China. It also exports to China, fruit and vegetables. So when there are delays, that certainly has an impact. But Vietnam's been very clever in building a very diversified pool of trading partners. It's beholden to none. Politically, it carves its own niche. China is a big part of Asia in this part of the world. And Vietnam actually is somewhat unique in that you mentioned earlier, it has a communist party, well, so does China. And it has two ways to communicate, government to government and then party to party. So it uses those channels cleverly to guide its path. But it's a very independent path. It doesn't want to be beholden to China. It doesn't want to be beholden to America or the West or any country. And it wants to be a global player as well. So it has to tread a careful path, but a resolute path, and can bring the common views of its 100 million people behind it as well. So it's Southeast Asia and North Asia and the interface across the East Asian Sea, or as you mentioned, the Chinese, say the South China Sea. Yes, that's a long-term issue that still needs to be resolved, but there's no immediate kind of concerns over that. More of the concerns, as you say, around global disruptions to trade from China and China slowdowns and what's happening there. And that's going to affect many countries in different ways. But one benefit that Vietnam has seen, when China's struggled over the last few years in terms of its trading relations with the US particularly, Vietnam has been able to garner much more investment and more manufacturers locating their operations in Vietnam. So although no one wins when there's geopolitical tensions, Vietnam's certainly been a beneficiary in the short term.
It certainly has. I think two things following on from what Craig says there. First of all, Vietnam is one of the few countries in Southeast Asia that will stand up to China over the South China Sea and has done in the past and will continue to do so, whereas the others tend to kind of cower down in front of China. And the second thing is that, of course, Vietnam has benefited massively from the sort of caution that's emerging in the West now about China. So in terms of dependence on China, people are diversifying their own supply sources by investing in Japan or in Vietnam, or sourcing from Vietnam, as opposed to China, having seen the pitfalls of being too dependent on one source.
So in that respect, it sounds like it's a beneficiary, perhaps, of some of the problems that China's facing at the moment.
It is, yes.
So look, I agree with Christine. It certainly has been over the last few years with Trump's trade tirades. A few years ago, it benefited. Dislocation in the early waves of the pandemic a couple of years ago, it benefited. It's been benefiting recently around that. I think Christine made another good observation, which is, for many investors, perhaps emerging markets is India and China only. Well, actually, it's now forcing people to look a little bit beyond that. And if you look at Vietnam, it perhaps is well placed to get some of the emerging market flow that may have gone just to, say, China. And if you look over the last 5 years, the Vietnam market has outperformed China, it's outperformed India, it's outperformed the emerging markets more broadly defined. So it's certainly worth looking at as an alternative, perhaps a diversification play, still within emerging markets, but not a concentrated one with respect just to, say, China or perhaps India.
And the other thing is, it is a low-cost source of supply. So although it's now above the likes of Cambodia and so on in cost terms, it's still much cheaper than China.
So there's a lot of headroom. I mean, it's a big concern about sourcing from China, that as the population gets richer, it becomes less of a competitive advantage to manufacture. That's not yet the case with Vietnam.
No.
Okay. So I mentioned in my introduction that Vietnam is targeting becoming a high-income country by 2045. So there is that headroom. How confident are you that it's going to get there? It has a plan, and it sounds like a very well-considered plan. I mean, do you believe the plan? But simply,
yes, I think it will. I mean, it might not be 2045, it might be 2050, but equally could be 2040. I think it will get there because I think it does things in a very, as I said at the outset, pragmatic way. So it'll get there by hook or by crook.
I mean, one way you would imagine, or that history suggests countries become high income countries is by evolving their industries and their industrial base and shifting, as I mentioned, into higher value sectors. Craig, can you give us a feel for perhaps where Vietnam is now in terms of the industries that it's concentrated in and where it might be going?
Well, Vietnam is rapidly digitalizing, and in fact, over the last 2 years of pandemic, we've seen that trend accelerate. Partly because it can put in green infrastructure, so it can put in high fiber broadband, and so Vietnam has a very large penetration of high-speed internet at very low cost. That helps industry. That also helps the education point that Christine mentioned as well. So the people are technically savvy. So Vietnam as a country, in terms of the manufacturing it attracts, it's changing from 30 years ago it was garden furniture and garments. Yes, it still has all of those, but it has high-tech components and items as well. And not just physical goods that are packaged in containers and exported, but digital goods. So Vietnam has a few companies, one of our portfolio companies, in fact, that is a massive provider of software outsourcing to global companies, a bit like some of the Indian companies did in the dot-com and the millennium bug era of the beginning of the 2000s. So Vietnam does that. It's also providing digital services to the needs of the consumer, so data storage and cloud. So there's a high-tech component there. There's also a move by the government to have a greener component. The government does set these audacious, ambitious plans. As you said, certain levels of modernization. At Glasgow last year at COP26, Vietnam also committed to be net zero by 2050, ahead of many other countries. So that's not without its challenges either. So there's an overlay of attracting technology, of investment, and perhaps greener, lower carbon forms of investment too. When the Vietnamese set their minds to something and rally themselves around a common goal, you'd be brave to stand in their way. So they'll achieve what they set to achieve. Yes, whether it's 5 years later or a couple of years earlier, it may not be precise, but there's a plan in place. I think it's also how the demographics change as well, and Vietnam has quite a relatively high saving rate emerging, and unlike some other parts of Asia, relatively small family size. So people invest in the family and they have surplus savings. We're starting to see that come into insurance products and into capital market products, and also in consumption as well. So it's a very interesting phase of its development. And through that digital e-commerce, it's one of the fastest e-commerce growth economies in Southeast Asia. So on certain levels of its modernizing journey and industrializing journey, it may accelerate and shorten that time frame as 5G is rolled out and as it sees more people come into the urban centers and live digital lives. We may see that, in fact, accelerate ahead of 2045.
I think one of the big advantages that countries like Vietnam have is that, in a sense, they've got a blank canvas. It's, in terms of green agenda and, digitization, they can just do what they like. I mean, Vietnam's quite a large country geographically, so they don't have to have all the problems we have here in the UK of planning permission and where do we put things and digging up all the roads. You just get on with it. Yeah. And that's a huge advantage.
Craig, you mentioned consumption and the sort of the financial sector. I mean, let's start with the financial sector. I mean, because obviously underpinning every strong economy is a strong financial system. Both of you with banking backgrounds would have seen this develop there. Can you give us a feel for how Vietnam's capital markets are developing and how this supports the growth story? Christine, start with you.
Yeah, I mean, first of all, the banking sector has a checkered history, to say the least, in Vietnam. There's been a few accidents along the way, and there is still a large state-owned component of the banking sector. But the banks are improving. I mean, again, when I visited and met the central bank and other banks other than Standard Chartered, there is a desire to be much more modern in the way they approach things. But obviously, these things take time. And there is a legacy issue still of a large volume of bad debts around. These have been accommodated through the pandemic, but they're still sitting on banks' balance sheets, and they at some point will have to come out in the wash. And that may be a drag over time. But I think from past experience with Vietnam, they will just eke it out over a long period, and that's how we'll manage it. In terms of the capital markets, it's still very thin, but again, there's massive ambitions, and that's, you know, a big plus, that, you know, people are looking for savings opportunities, so they're keen to exploit the various opportunities in the capital markets, and they're keen to try things out as well, which is good. But the regulators, I mean, a bit like in China, the people in charge of the regulation are much stronger than the people in the central bank itself. You know, typically the regulators are the ones that are US educated, you know, got the MBAs and so on, whereas the central bank, in the main, tend to be much more traditional, stoic, as it were, and perhaps less able to move with the times.
It sounds like a familiar story across the globe. I mean, in terms of your experience,
not in the UK. The other way around in the UK.
In terms of your experience, Craig, you're obviously still at the front line of investing in Vietnam. What's your experience of the markets and the market structure in terms of the investment markets?
It's still early days. I mean, the capital markets are young. They're less than 20 years old in Vietnam. 16 years ago, when one of the funds we manage was launched, the market capitalization of the entire country was $2 billion. Today, it's $340 billion. And there are 1,600 companies listed across 3 exchanges. And they're not only common stocks, they're warrants, they're ETFs. So there's been an increase over a relatively short period of time of financial awareness and of, as Christine said, the regulatory environment to enable the growth in the capital market. And that's also attracting domestic money. So during the pandemic, certainly over the last year and a half, there's been 1.5 million new domestic trading accounts opened, people enabled by technology on their phones to do their KYC through electronic means, which as a banker, Christine knows KYC is important, but it can be cumbersome in certain countries. But that's been digitalized, so people have accounts. And as a result, the liquidity in the Vietnamese stock markets has risen to levels second only to Thailand in Southeast Asia, which has a much older capital market. So it's moved quickly. The bond market's also developing. The banking, as Christine says, goes through these cycles of growth and improving and putting in new systems and dealing with legacy bad debts. It's never a smooth continuum, but the direction's upwards. And so there's tremendous growth potential in the capital markets. We've only just seen the tip of the iceberg of domestic capital. There's more of that to come as there's perhaps institutionalized kind of savings programs and pension plans that will come into the market. The government are quite keen to make sure it's done smoothly and well, though. They're looking at the regulatory aspects and perhaps looking to have better use of credit rating agency for the bond market, to govern the banks a little bit better so that they're not blurring the lines between real estate activities and issuing bonds and investing their own proprietary capital. So it's still got a long way to go, but the banking sector has been a strong performer over the last couple of years. And many of these banks now have also digitalized. They've improved their core banking systems. They're looking at electronic offerings and new ways of reaching the consumers who now have this appetite for doing everything by their smartphone. For a country of 100 million people, there are 150 million phone subscribers in Vietnam. People have more than one SIM card, and there's 70 to 80% penetration of smartphone. So that is a banking device. That's a brokerage account. That's a shopping assistant. It's also an education portal. So when you have this new technology and without the legacy kind of issues that Christine rightly alluded to, you've got a powerful combination. So early days for the capital market, there's some companies we've seen that have grown so dramatically over a relatively short period of time, and category champions. And then there's new emerging companies that will also go through a period of dramatic compound growth over the next 10, 15 years. So it's got an awful long way to go.
Absolutely. Well, we've heard about the Vietnamese saver and investor. Tell us a bit about the Vietnamese consumer. Where is what's the direction of travel for consumption in the country? How is that underpinned by growing wealth? Perhaps Craig, you could start us off on that.
Yeah, look, it's very interesting. So in the 1990s, for a brand to be popular in Vietnam, it had to be a foreign brand made overseas. So made in France or made in the UK or made in America. And then in the 2000s, it didn't have to be made overseas. It could be made in Vietnam, but it benefited from being a foreign brand, with a French name or a French parent brand or an American parent brand, but manufactured in Vietnam. Now there's a great appetite for local brands. So the consumer has gone through a dramatic renaissance or revolution, I would say, in the last 30 years, not only from Vietnam, but also influenced by Korea, South Korea, through media, through entertainment and K-drama and food and fashion. So it's a changing place. So it's a rapidly changing place, and obviously accelerating trends through digital offerings, and people can select and become aware of price points on products. So it's a changing landscape. The consumption GDP per capita levels are north of $3,000, which is historically where you see an inflection point in consumption of consumer goods. We saw that in Thailand, we saw that in China a number of years ago. And in the last 20 years, that's a trebling of the per capita GDP. So in the early 2000s, people were starting to consume in Vietnam, and use of advertising to drive brand awareness and interest and trial. Now at 3 times those levels, and with a digital environment, people can try things much more quickly, and through TikTok and the Vietnamese equivalents of that, see brands in action. So it's harder for marketers. There's a lot more they need to do. There's more choice for consumer, and sometimes a little bit more fickle, but it just means there is a real consumer society that's growing very rapidly in Vietnam.
I think, just to add to that, I think the big strength there is that Vietnam is still a very young population. I mean, it is obviously the population is aging, and the growth rate has slowed to less than 2% a year now, population growth. But the workforce is still growing for now, but that will obviously stop over time. But because the population's young, they are susceptible to the latest trends, really. And increasingly, the youngsters are the ones that have got the high incomes, because many of them are educated in Europe or the US, as I said at the outset. The older population tend to be more communist educated, as it were, Russia or China. And it's a different sort of attitude that comes with that, I think.
I mean, but that does sound like there's the scope for it to develop its own technology industry. It's, as you say, its own tech platforms.
Very much so.
Rather than sort of importing the sort of Facebooks and WhatsApps. Is that something you're seeing in perhaps the investment opportunities that you're finding, Craig?
Well, we're certainly seeing a big interest in young, digitally savvy entrepreneurs in Vietnam having a go. Cost of failure is low, cost of operations cheap, technology is cheap, and the labor cost is cheap. So if you want to try something and scale it up, you can certainly do that in Vietnam. We've seen over the last 20 years, Vietnamese electronic gaming platforms and social media platforms and digital education and learning platforms. And even now, one of the world's largest NFT non-fungible token trading games, Axie Infinity, is a Vietnamese company. So even on groundbreaking or bleeding edge technology as well, there are many Vietnamese companies involved in this. And the Vietnamese are very smart when it comes to mathematics. And you go to Silicon Valley and other countries, many of those technology leaders, many of them came from Vietnam, actually. So there's a history in strong maths, in strong engineering, and that comes together in a very talented workforce in terms of software engineering and development. So there'll be a big push on that. And that's part of this digitalization and modernization that the Vietnamese government wants to see. A modern industrial nation does mean a digitally enabled, digital savvy nation. And there's certainly the opportunity for that in the country.
Yeah, that's right. The other thing that is a big strength for Vietnam is the diaspora. There's an awful lot of Vietnamese living overseas, and there's still links back into Vietnam. And obviously it is still, their perception of their home country. And that's a huge strength in terms of, non-resident finance coming into Vietnam, akin to the non-resident deposits in India, but also in terms of skills and exchange opportunities, I think.
I mean, it all sounds like the right ingredients, not just for economic growth, but economic growth delivered in a stable and manageable fashion. Why do you think that more investors haven't yet cottoned on to Vietnam as an investment destination? It sounds like the sort of perfect mix of everything you'd want to see in a fast-growing economy.
It's seen still as a frontier economy. And so many people don't invest in frontier markets. They don't know how to access them, or it seems very exotic. The benefit for somewhere like Vietnam is you have a number of funds listed on the London Stock Exchange, so people can put their toes in the water and explore that. So increasingly, awareness is increasing, but until, I guess, Vietnam is seen as a fully fledged emerging country by the agencies that rate countries for capital investments, then it will still perhaps not be so familiar to the broadest pool of investors. So certainly many people that visited Southeast Asia and Vietnam fall in love with it and think, okay, I want to invest there. It still has a large allocation to frontier investors. It's about 30% of the frontier index. But in terms of the emerging markets, is not a fully seen as a full part of the emerging market universe. So some investors either can't invest in Vietnam or have other geographies in the world that take their attention.
But presumably that will change.
It will change, but slowly. I mean, it's quite a long way below investment grade in the rating agencies' books, and it's got quite a long way to come up. And for that to be achieved, I think, for it to achieve investment grade status, it's got to finally sort out the financial sector, and that means sorting out these bad debts in the banks, and that's quite a long-term thing to resolve, I think.
But nevertheless, it still sounds like a story that you can get on board reasonably early with, and
very much so.
Kind of hard to find those in the world these days.
Certainly is.
Christine and Craig, it's been absolutely fantastic talking to you, and thank you very much for sharing your insights into what sounds like an incredible country, one that I'd very much like to visit soon, as I'm sure many people will now the world has reopened. Thank you all for listening today, and hopefully we'll be back soon with more insights into other fantastic investing regions. Thank you.
Thank you.
Thanks very much. Thank you.